Nilesh, in fact, this bit about bank deposits is a macro factor and a worry in some quarters because the financialization of savings is happening. But the Atmanirbhar market point that Madhu made and Uttar Pradesh having the second largest number, this was unimaginable 20 years ago. What is behind this?
So thank you, Siddharth Bhai, for having me over here. I'll attribute this to Kal Aaj or Kal phenomena. So जो कल था वो ग्रैंडफादर के जमाने के थे. They invested in EPFO, Provident Fund. Today, Provident Fund corpus is about 25 lakh crore. As on March 24, March 25, it will be 30 lakh crore. And there are more than 7 crore subscribers. So on an average, after investing for so many years, subscriber is making about 3 lakh rupee. Fast forward to NPS, it was introduced only in 2004. Total corpus is now about 14 lakh crore. And number of real subscribers, excluding the NPS Vatsalya scheme and stuff like that, is about 1.2 crore. Average subscriber wealth is about 11.24 lakh. 3.34 versus 11.24 कल की generation को समझ में आ गया. Then आज की generation and the father generation, they went into PPF, and if they invested about 1.5 lakh rupee for 25 years, principal investment was 37.5 lakh rupee. It grew to about 1.1 crore tax-free. The same money invested in equity-linked savings scheme, average equity-linked savings scheme, not the best performing, 37.5 lakh crore would have gone to 4.4 crore taxable. 12.5% tax निकाल दो, still 1 crore versus 4 crore. वो आज की generation को समझ आ गया. अब आने वाली कल की generation है, which is the son and daughter, they have seen benefit of startup investing. Their dreams are getting wings with the startup investing. So this phenomena is the Kal Aaj or Kal realizing that real wealth is made by partnering with India's best entrepreneurs.
Okay, real wealth is made by partnering with India's best entrepreneurs, and this is a very important point because we are here at the India Today conclave and we discuss the broader economy, the political economy and general politics. In many years ago, I would say entrepreneurship and private sector capital was a vilified term, and it was believed that all companies are robber barons, and this was alleged. But Pramod, coming to you, is there a downside to this? Because if we were to go into that data, the median age of the investor, particularly ones who have come in now, the point that Nilesh also made, is just 33 years. So let's imagine somebody enters the workforce at 23. He has just 10 years and he is putting in far higher amounts of his surplus capital into the markets, Pramod.
Yeah, thank you. Thanks for having me here. I think the answer is in your question itself. And like Nilesh Bhai said, we are an extremely young country from a demographic perspective. And given that equity is a long-term asset class, the fact that our average or median investor is young means that he has a long runway to deal with short-term volatility. And I think Nilesh and the mutual fund industry have done a phenomenal job in terms of creating this awareness that you're not here for a quick buck. There are ills on the FNO end of the spectrum, which I think the government is recognized is fulfilling. But long-term investing in equities through mutual funds in a systematic way through SIPs is tailor-made for India's demographics, because these kids at 30, 33 still have 30 years to go before fulfilling their retirement goals. If not India, who else would take this longer-term risk? Having said that, yes, there are shorter-term risks which will play out. We've had 5 quarters of single-digit earnings growth. Valuations are high. There are plenty of risks on the geopolitical side, trade, and so on. But as long as we create this awareness that the real risk is not about losing your money. If you're talking about risk of going through temporary slowdowns, I think the onus is on us, all three of us and the rest of the industry, to educate and ensure the investor stays invested. And as Madhu, I was saying outside, that if you look at people who've invested 20 years ago, we've been through several downturns, right? I mean, the GFC or Lehman crisis was a 60% drawdown for the market. Despite that, people who had invested prior to that are sitting on significant wealth creation. So the onus is on us, and luckily I think the spread of social media, well, it has its downsides, but it gives a platform for all of us to communicate effectively to the end investor that this is the real benefit, rather than trying to get swayed away by instant gratification. If you focus on your financial aspirations for a young country, it's all long term, and build a portfolio to stay invested for the long run, the outcomes will be good, provided you have the emotional bandwidth to go through the shorter term, inevitable short term downturns.